TradersNetwork.com.
Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on YorbaMedia.com. All right, one of our sharpshooters, one of the best sharpshooters out there, Nick Santiago, President, CEO, In the Money Stocks, coming on the show right now. Nick, thanks for showing up.
Great to be back, Michael. Thank you for having me.
All right, my pleasure too. Now, before we get off into the Euro or LIN or QQQ or FTX, I got a question that came into me just a few minutes ago from the other side of the world, Ozzie Pete, and thank you, Ozzie Pete, for sending this out to us in a timely fashion. He's got a question for you. He wants to know about the stock market. The question is about the 24th. If you've got anything that says, let me read it to you. Question is, does it continue down into the 24th, meaning the S&Ps or the stock indexes, or do we get a sharp rebound into the 24th? Do you have any idea how this might play out as we go forward?
Well, I don't really have anything per se talking about the 24th. I mean, right now we're in earnings season. So there's always, a chance of markets rebounding or being volatile really throughout the rest of the month. But I'm not seeing anything specific about the 24th. As you know, I've been warning on your show and warning my traders, hey, we're in a time period where the markets are very, very vulnerable. I think right now we're coming down into a support level, but I don't really see anything for April 24th that is telling me one way or the other what's going to happen.
But for now, let's say, because you were going to talk about the QQQs today, right?
Yes.
For now, let's pertain to what you see there, and that's because that's really connected to the rest of them.
Yeah, well, right now, I mean, the Qs are coming down to their daily chart 200 moving average. We've had a real good fall from $70. I was on your show just over a week ago talking about that level, saying, the Qs are going to be the place to short, and we've had a pretty good fall from 70 down to 67. Now we're right at that 200-day moving average, so we have to be prepared that there could be some short-term support and a bounce potentially. And then we look at the pattern, and then we look to short the Qs again.
Okay, all right. My numbers, I've got a number I've been leaning on for a while, Friday, the 19th, to give me some kind of a really strong low. Do you see velocity increasing as we go into the early part of next week with these Qs?
Well, I do think the 19th is always a pivotal day every single year. In fact, I hate to say this, but around the 19th, if you look at that anniversary, give or take 5 trading days, we usually see some kind of a tragedy happen, whether it's somewhere in the country. And this has been going on for many, many years. You could just see the Boston Marathon tragedy that just happened. So it is a pivotal time point for me cyclically. Each and every year, so the 19th could be a significant a day.
Any price support levels you're looking at going into that time frame?
Well, considering where the market is today, I mean, right now I think the spiders around the 153 level will have a fair amount of support. So, we kind of got close to that level today with the SPY trading down towards the 153.55 level. I still think the market is vulnerable into 153, maybe even 152. I think there's going to be a lot of support there for the market just in the short term, give or take, a couple of days to a week or so. And then we'd really have to look at the chart pattern and see what that is telling us once a pattern forms after a week or so.
Thanks for a real straightforward answer. There you go, Ozzie Pete, and coming to us from New Queensland, Australia, on the other side of the earth. Thank you. All right, let's go back to where you were going to start with, the Euro-US.
Yeah, I wanted to start with the Euro because I guess it was a couple of weeks ago, I talked about the Euro getting up to the 132 area, and that would be the place to short. So I think if traders didn't get in on that trade yet on the short side, I think this could ultimately set up for another bearish pattern. This Euro does want to get down to around the 125 level. So there's plenty of meat and potatoes on the downside. And a couple of ways of doing it are to short the FXE, and you could also play it by buying the EUO, which is the ProShares Ultra Short Euro ETF. So those are two ways of playing it. But I would try to go off the Euro chart as that really is what those vehicles follow.
Okay, where's the resistance area that you're looking to short on this Euro-US?
Well, this is something that I told your listeners at 132 is a spot, and it's already down from that level, trading at 130.53 today.
Okay, so we've passed the point of you don't think you're going to get a little bounce out of here, is what I'm hearing.
Well, I think you can trade sideways, and if that happens, you could just put a stop above, 132.15, and I think you could still short it because it has downside to 125.
Okay, all right, got it. All right, LEN.
Yeah, I want to talk about LEN because that was another one I brought up on your show. In fact, that day was, I believe, the 20th of March, and I said right at the dead high that day, 43.90, traders can short Lennar, and I said this is going to be the telltale sign that problems are brewing when this housing market starts to roll over. That trade is now covered, but either way, it went all the way down to our $38 target. Today it's hitting the 200-day moving average, so it may find some short-term support, but I ultimately think Lennar is a stock that traders want to keep on the radar for any kind of a bearish consolidation pattern, and this probably could be reshorted down to the 33.50 level, provided that we get a good bearish pattern formation.
Okay, so are you expecting a bounce to where? What, 39?
Well, I don't even think it's going to give us much of a bounce, but
okay.
I do think we'll get more of a sideways pattern somewhere around the $38, $38.50 level. Any consolidation in that range looks like a short setup would be forming.
Okay, what's this FDX?
Well, FDX is Federal Express. And Federal Express has been a stock that peaked out on the 11th of March. It came out with earnings, I believe, on the 20th of March, and the stock had a big gap down. But now the stock is nearing bounce levels, and I think around anywhere from 87 to 88, traders can look for a short-term bounce in Federal Express. This is one I would keep on the radar as well, but I think a bounce back up to $95 or something is very, very reasonable. There I would watch for the pattern because I think that's where the stock ultimately could become a short trade setup.
Okay. All right. Let's go over to J.P. Morgan. That's one of the your little tell signals that you've woken us up to around here, and you've been very good about this thing. So what's it telling you?
Well, right now J.P. Morgan's a little bit oversold. There's a fair amount of support around $46. That's actually a level that I gave out on your show to watch for support. You can see today the stock traded down, I believe, to 46.05. So. Almost got to that even number. Now, I think that the big sign for J.P. Morgan is what does it do in the next week, and we won't really know until we see more of a chart pattern. But I do think there is short-term support at this level. If J.P. Morgan breaks down, watch for this thing to immediately trade down to the $43 level because that's the next line of support should 46 get taken out with any volume.
Okay, anything else out there in the banking industry before we move on to another sector?
Well, I think traders should look at BlackRock, and the ticker symbol on that is BLK. And the stock has sold off pretty sharply over this past week. This is another stock that I think is very, very important. If you take a look at a weekly chart, if we close down here by tomorrow afternoon, we'll have a nice reversal bar in on that chart. BlackRock is the one stock that people don't talk about, and they're probably, they're a well-run company, but either way you slice or dice it, they carry a lot of weight in the financial sector. In other words, they're the other Goldman Sachs, the low-key version of Goldman. But I think that BlackRock's a stock that you got to keep that's up with a bearish chart set up. I mean, this can get really nasty on the sell side.
Well, speaking of Goldman Sachs, they just broke today on a closing basis, and it's not closed yet, but it's pretty close to it, that low they set up earlier in the month. That's pretty critical for me,
Well, I think you're right. I think Goldman right now has just broken down pretty nicely, especially after those earnings where they said they made money really just in trading. They really didn't make that much money in the investment banking arm. That's neither here nor there. But right now, Goldman's hitting the weekly chart 200 moving average, and I think that probably has a little short-term support. But I think Goldman's headed lower as well. I think that's a stock that's vulnerable all the way down to around 113, 114. But again, this is just going to be these markets are just not going to crack and crash. I think they're going to be, they're going to be patterns in here where you could get in and have to be nimble, especially when trading on the short side.
Okay, we got about a minute and a half left. And before we haven't done this, and I want to do more of this. Every day you trade in the markets all day long. People looking over your shoulder, pulling the trigger. Tell me what happened today.
Well, today we had quite a few good trades. I give out my morning gap plays before the market even opens, and today we were 3 for 3. We had
Yeah, my guy. Go on.
we had United Health, we had eBay, and then we had also Philip Morris. So right before the market even opened, I gave out all those levels, and there were 3 good trade setups in there, all 3 winners.
God, you make me look so good. All right, give them all a way to get a hold of you.
Well, come on over to InTheMoneyStocks.com. Take out a 7-day free trial. Try the intraday stock chat if you're a day trader or if you're a swing trader and you're in front of the computer every day. I mean, it's well worth every penny, Michael. It's less than $10 a day. And, some traders tell me they just can't live without the chat room. So, and if you work a full-time job, try out our research center. You'll get all of our swing trade setups. One of them is Amazon.com. And, you see that stock is down pretty nicely today. And, we just put trades out one day after another. So I think you have nothing to lose. Take a 7-day free trial.
You got it. All right, Nick, thanks so much.
Thank you, Michael. Have a great day.
You too. Nick Santiago, President and CEO, InTheMoneyStocks.com. You heard it. You heard the results. That's if that's what you want in your portfolio, you know what to do next. All right, coming up next after